We're looking at the outcome of the CBN's Monetary Policy Committee meeting yesterday, where the committee decided to hold the key lending rate unchanged at 12%. But of course, it cited some concerns. It said a slowdown in global economic recovery and, of course, a dip in oil prices. Some of the reasons why they believe that that might impact on Nigeria's economic growth, talking about the GDP growth, which actually fell in the last quarter to 6.1% from around 7.6% previously. Well, joining me now is he's a financial analyst and CEO of Fares Consultant. Thank you so much, he's for being here.
Morning.
Now, well, we knew what the predictions were way before now. Most analysts said that they didn't expect a hike in rates. What were your own expectations or forecasts?
Well, in terms of forecast and expectation, the truth is that, like most analysts have said, there's no surprise in the fact that CBN maintained the rates as they are. The challenge is that it further creates challenges for the real sector, because the truth is that we really must do something to see moderation of the MPR rates. Because as
Downwards.
It is now, yeah, really, but you see, you don't just habitually move those rates when the fundamentals do not justify it. Because if you move the rates down by fiat, you are just you're not doing anything really constructive. So the central bank has looked at the economy, looked at the situation with the fundamentals in terms of inflation rates, the foreign exchange rates, and the in their wisdom, believe that this is the best thing to do to keep it at that. But the worry I'm expressing is the fact that, when you have high MPR, okay, I mean, CBN in this report also, they acknowledge the fact that the average maximum lending rate in the banking sector, in April was 23.31%, whereas the consolidated deposit rate was just 3.93%. And they lamented the fact that there's a huge gap, the spread between the deposit rate and the lending rate is 19.38%. That is alarming and scandalous, because what the CBN has always said is that they want a spread of 7.5%. Maximum. But now we are having almost 20%. So the point is that, our system is, you wonder the kind of distortions in our system that make it, distortions that make it impossible for us to have moderated lending rates. Because if the average deposit rate is just under 4%, then why would lending rate be 23%, a spread of almost 20, 200 basis points, or 2,000 basis points. So that is something of great concern, because the rate sector cannot cope with such lending rates. In the West, in America today, the interest rate is the Federal Reserve benchmark rate is just 0.25%. In the UK, it's just 0.5%.
Well, they had a general monetary easing, they had a quantitative easing program, to support the economy, to support most of the banks, on Wall Street. Yeah,
so what we should be trying, we've been talking about achieving a single-digit interest rate for a long time. We've been talking about, bringing down inflation rate to single digits. It's easier said than done, but the point I'm really making is that we really do still need to do a lot of work, to get the. If you look at the interest rates, the benchmark interest rate of most countries, is the underdeveloped countries, is the countries in the third world countries that have the kind of interest rates they are seeing 18%, 14%, 15%.
Well, that's because sorry to bother, because the central bank argues and continues to argue that its hands are tied. It's only reacting to what the fiscal authorities do. If the government has an expansionary budget and they want to embark on huge infrastructure projects, they need to spend more money. So that's more money in the system, and the CBN has to mop up this cash. So of course they have to do what they have to do.
Right now,
they of course desire an interest rate, a single-digit interest rate, but like they said, there's only so much they can do. But
the Federal Account Allocation Committee has not. I think they're about 2 months, almost 2 months behind now. So the issue of the surfeit of liquidity in the system is superfluous, because I don't think there's any surfeit of liquidity at this time in the system.
We can see it from the Treasury's market. The central bank keeps maybe once or twice in a month, serious liquidity mop-up by the CBN.
Yeah, that which is the irony in our system. I mean, the situation where we have actually seen a cutback in fiscal spending, although you are seeing that. But in terms of, I mean, the NYC corpers have not been paid for 2 months. Some federal employees have not been paid for some time. Local government, state government. So actually we're actually having a liquidity crunch. But the irony is that, you see, in our system there's a lot of speculation, especially on the FX area. You find that because of the uncertainty in our systems, the demand for FX is not really justified by production or productive activity in the system. There's a lot of speculation. People don't have confidence in the economy, so we are seeing bubble demand, for a foreign exchange, which is putting pressure on the naira, and also,
of course, that all goes down back to the structural imbalances in the economy, which have always been there, which we have to just work around.
So in essence, I'm saying that the CBN, it really is a challenge for them, because I'm sure they would like to see single digits MPR like it was, some years back. But the reality is that there are a lot of distortions. Exactly.
But of course, I was
exactly.
Very
but so the point I'm making is that there are structural defects and structural defects distortions in our system, which actually make monetary policy implementation almost academic. Because I mean, you move the MPR rates, and you don't really see even the banks responding the way you expect in terms of their own lending rates. Like I've just lamented. Okay, how do you explain a situation where you have just 4% as the average consolidated average deposit rate, and then you are seeing 20% spread? So I'm saying that the CBN actually needs to deal with that, because I think that much can be done in moderate interest rates if the CBN, if they can tackle the issue of the cost of doing bank business in this country, which makes it almost inevitable that banks have to charge kind of interest rates they are charging. I'm saying that this is not what it should be, and something ought to be done about that.
Now, let me take you back to the inflation rate, 12.9%, the latest figures from the National Bureau of Statistics for the month of April.
Yes.
So some analysts were actually expecting that perhaps, that's the highest we've had since 2010, actually, that the CBN may actually have reacted to that. But even inflation that high, the CBN still decided to hold rates steady.
Yeah, and what the CBN explained as part of the, food inflation went up, and we also, the CBN also lamented in the MPC meeting that there was a decline in terms of the growth in the agri sector. Part of the problem was the issue of security in the northern states, where some farmers have had to relocate, or if they've not relocated, they've had to take cover.
Yes, I found that funny because we've had a very good, we haven't gotten into the peak of the rainy season, but we've had ample amount of rain.
That's why they pointed out, the MPC talked about the security impact on the agri sector. And that is very fundamental, especially where food production is affected, and you are going to see that food inflation will go up. We've also seen, even in the oil sector, we've seen, because of leakages, the Minister of Oil, Petroleum Resources lamented the fact that we lose about $7 billion, to theft of oil. So there are lots of issues that still need to be addressed for us to have moderated inflation rate. And the outlook, I think the outlook is going to be even worse, because by the time the CBN, by the time the government implement some of the policies that were in its 2012 budget, which will happen from June going forward, in terms of the increase in the tariff for rice, for wheat and all that. Okay. We are going to see a situation where the prices of those commodities will go up. So the outlook on inflation is still... So we have a CPI consumer price index will go up. Yes, bread has become, is a staple in Nigeria. Of course, rice, imported rice at that. So if we are seeing increase in tariff in those, which is salutary in terms of the policy on local production, but in the short term, we're going to see that the prices of those commodities will go up. So in terms of food inflation, the outlook is still a bit negative, at least in the next 3 to 6 months. Now, the
CBN, the MPC also pointed out a sluggish growth in credit, for the at least for the last quarter, and they also cited the stable exchange rates and the growing or higher forex reserves. I think our forex reserves right now at around 38.4 billion. How have they been able to manage that?
Well, I think that there's been a deliberate effort on the part of the central bank to ensure accretion in the, to the foreign exchange reserve, because we are going to a situation where it fell to 33 billion US dollars, some months back. Everybody was alarmed. But, even as the foreign exchange reserve is increasing and grown to 38 billion as at 17th of May, we are seeing a situation where the excess crude account has been virtually brought down to nothing.
How worried should we be about the depletion of this?
We should be very worried, because the truth is that, you see, okay, look at even the sovereign wealth fund that we thought by now should have really gone on, begun to operate and all that. We are seeing now that the governors are not letting up in their fight, to ensure that nothing reduces how much is due to them. So there must be political intervention. What the federal government needs to do is to sit down with the state government and, actually moderate the fiscal expansion that they have an appetite for. It's understandable when politicians are in power, they want to show that they've done something. But at the end of the day, and the sad thing is that if we're not even seeing the impact of those expenditures on the well-being and welfare of the Nigerian citizenry. The poverty rate has not, it's still quite high, 69%, the Nigerian Bureau of Statistics says. Yes, our foreign exchange rate is, foreign exchange reserves has, increased reasonably. But then again, you can also see the impact on the exchange rates, because that means that, the central bank is not as bullish in defending the naira as it has been. And you've seen the margin between the official CBN rate and even the parallel rate, increasing a little bit. So I'm not very optimistic as to the central bank's continued ability to keep interest rates. My own prognosis is that in the next few months we could see the naira rate to the dollar, going to up to possibly 165 naira, and because I don't see how, with what is going on in the oil market, in the crude oil market internationally, I don't see how the central bank can cope.
Hopefully, we hope that they will be able to cope and, of course, continue to stick to their mandate of ensuring price and exchange rate stability. Well, thank you so much, Ehis, for your thoughts. We have to leave it there for now.
Thank
you so much for being here. I've been talking to Ehis Eyeye. He's a financial analyst and chief executive officer of Faras Consulting, and we have been reviewing the MPC, the CBN's Monetary Policy Committee meeting outcome yesterday, where members kept the key lending rate at 12%. That's the rate at which the Central Bank of Nigeria lends to commercial banks in the country. We'll be right back after this break, and this time we'll be looking at the currencies market. Please stay with us. Welcome back to Business Morning. Now we're moving to the currencies market, and we're continuing with the series on trading strategies, those strategies that currencies traders can use at the market to help maximize gains. Well, joining me now is Olugbenga Fagbohun. He's a currency analyst and trader at Forex Time. We'll be looking at today's trading strategy called the gap trading strategy. Thank you so much, Wenga, for being here now. Michael and Esther have been here in previous sessions to talk about some trading strategies. So tell us about this gap. What is a gap trading strategy?
For a second, I was tempted to say gap is when market gapped, but that would
market
not,
gap, okay.
but that would not really make sense to us. Market prices, okay, there's always a flow in the market when traders are buying and selling. So there's a continuous footprint that the market leaves, and that is represented by chart patterns. So if all of a sudden you now see a jump, okay, a disruption in the flow, okay, that is what we refer to as a market gap. That means there's an empty space, okay, that needs to be filled up, that needs to be covered.
When you say footprints, can you expand on that?
Yes, for example, when you look at the currencies market, for example, initially the gap is not a new strategy. Okay, it's been popular in the stock market, but in the currencies market, when we talk about gap, we usually refer to end of the week gaps, because normally market opens on Sunday night, that's 5 p.m. Eastern time, US Eastern time, okay, and closes Friday night, 5 p.m. Eastern time. Now, between those two periods, okay, anything could have happened in between. There could be meetings, for example, last weekend we had G8 meeting. Okay, so such fundamentals or technicals could move the market during the period that the market is actually closed for trading. Okay, so when the market opens on a new trading day, okay, that is Sunday night, okay, 5 p.m. Eastern time US, okay, then all the things that had happened during the weekend is factored into the market opening price. So there's a jump in price. So there's a difference between Friday's closing price and Sunday's opening price. So that jump in price is what we refer to as market gap.
Okay, so between yesterday, Tuesday, and this morning, have we had any?
No, we haven't have any market gap.
Not even with there's a major summit today in Brussels.
Exchange market, it's a continuous, it's a 24-hour market. Okay, so it's a continuous order flow. Apart from weekend, that is when you have a sort of break. Okay, that is when the forex market goes to sleep. Like we normally say, the forex market never sleeps because it's a 24-hour market, a continuous market.
Okay, has there been any reaction to what's been going on in the last 48 hours? This the summit.
Yes, there has been a reaction. Okay, if for example, last week on Friday we had the Commodity Futures and Trading Commission telling us that we have a record short on euro by speculators. That's over 174,000 contracts on sale. Okay, we also have traders speculating that dollar was going to be strong. Okay,
because of the
weakness. Also a record. Okay, so we've been seeing record recently. This morning, euro again made a new record. I think a 21-month record.
Down or up?
Down. That is way back since 2010, around August. So dollar has been strengthening across board because this is a period of risk aversion. So traders are moving towards safe haven currencies, the Japanese yen and the dollar. Okay, for example, I think yesterday, Fitch, they downgraded the Japanese yen, but you saw that towards the closing hour, the yen strengthened in price. And that was due to the fact that a lot of people were moving to the safe haven currencies.
There's just nowhere else to go,
even
though there was a downgrade.
And
it's either the dollar
I'm
or
even
the
surprised that euro is still at this level. I'm anticipating that it should drop further. Because all the talks by the, they're having a European summit today, and what they've been saying is just talks and no substance. And yesterday, Papademos came about and said that the risk of Greece actually leaving the Eurozone is quite high. And so you can see a lot of, this reminds us of what happened back in the Lehman Brothers case and the bear stearns. Okay, it's almost the same thing. So we are seeing a recession. Okay, even the pound is also having a serious recession. Okay, double dip recession. I think this morning their retail sale, also another record. That was the largest loss they had in retail sales. I think over 2.3% or so.
So it's all just majorly gloom right now for the markets. Okay, let's go back to the trading strategy before we stray too far. Now, what are the likely causes of these gaps, and how can they? Well, as the name suggests, gaps. I believe I can say, how can these gaps be filled?
Yes, if it's possible. Ordinarily, nature abhors a vacuum. Okay, so traders are anticipating that if there's a gap that has been created, at some point it will be filled. Okay, and now because traders are anticipating that gaps will fill, and price action is the result of anticipation of what traders are doing. So eventually, we usually see that the gaps actually get filled. Okay, now how we take advantage of this is that when the market opens okay, after the weekly gap has formed, like we have been seeing frequently on the euro-US dollar currency pair, okay, for several weeks we've been having gaps. Okay, so market anticipate that when you have a gap like that, okay, you should just wait for a while and let the gap get covered. So once it gets covered, then traders take advantage of that.
So what or who covers these gaps?
Traders.
How do they cover? I want you to break it down,
okay,
to the very, because for those who are watching, thinking about coming to the currencies market, I know they do have to come for some basic classes to understand some of these technical words that we use here. But for somebody who is still trying to make that decision, for them to understand it better.
Right. Now, when a gap is created in the market, like we have explained, that that is usually a result of news fundamentals occurrence during the week, during the weekend. Okay, so when the market opens Sunday night and you have a gap, because of that singular fact that nature's abhors a vacuum, okay, people expect the gap to be filled. Now, for example, when you look at the euro has been weak across board, right? So it has been gapping downwards. In other words, it closes at a particular price on Friday evening, and on Sunday evening, it jumps down. There's a space in between the closing price on Friday compared to the opening price on Sunday. Okay, so what traders expect is that the price will move up. Okay, that there will be a sort of take profit, okay, short covering, and the price will move up a bit in order to fill the gap. Now, once the gap is filled, then traders now sell the euro. So that is just the way it is. So once the gap is filled, then we can now take advantage of that and use that as a point, as a resistant point, okay, in this scenario, because euro is gapping downwards. Okay, you could have an upward gap or a downward gap depending on market sentiment. Okay, but in this current scenario, euro has been gapping downwards. So you wait for the market to push up a little bit to cover up the gap, then you place your trade from there.
How often do these gaps occur?
Now, gaps in the foreign exchange market is not as popular as you have in the stock market. In the stock market, you have end-of-day trading. Okay, so you could have gaps, relatively within the week. Okay, but in the foreign exchange market, you have end-of-week trading. Okay, so gaps often occur at the end of the week, so it's not as frequent as the gaps you have in the stock exchange market. So okay, but once they occur, it's usually during a period of high volatility, like what we are having now, gloom and doom and everything, and a lot of things are happening.
So we've had
lots of gaps during this period.
Interesting. Now, how do traders? Because I know at the market it's all about profits. It's all about making profits. So how do traders, or how have traders been leveraging on this, to make profit?
Now, when you see market gap downwards, that tells us that there's a strong sentiment in selling that particular currency. Okay, so euro has been gapping downwards, pound has been gapping downwards. Okay, that tells us that what the strong sentiment to sell is still in place. So as traders, we are looking to sell. That is the idea, because it tells us that things are not yet right once we have the gap. Okay, because if there's no gap, then we might say, well, anything could happen. But for the fact that there was a gap, then that means over the weekend, traders are still thinking of selling. So all you want to do as a trader in the currencies market is wait a bit for the gap to be filled. Okay, sometimes the gap are not filled completely. Sometimes you have a complete fill, sometimes you have a partial fill. Okay, but most of the time, just wait a bit for the market to correct itself. Okay, filling the gap a little bit or completely, then you take yourself from there, because the gap shows you that the sentiment is still strong in a particular direction.
Have you also been selling the euro?
Yes, sure, I have.
Okay, hold your thoughts for us, Benga. Let's take a quick break. Now, when we come back, we'll look at some charts to get a better picture of what we're talking about. I've been talking to Olugbenga Fagbo. He's a currencies trader and analyst at Forex Time, and we're looking at more trading strategies that the currencies traders can use at the currencies market to maximize profit. Today, we're looking at the gap trading strategy. We'll be back after this break.
Our investments are really going down.
What's funny? My chart reads otherwise. Because I understand that laying the right foundation is the key to steady returns on investments, which is why I chose to attend training with Forex Time. Forex Time is one of the world's leading brokers in foreign currency trading. Forex Time has given me an outstanding knowledge base for maximizing my investment returns. As a team, we can take advantage of Forex Time training sessions and improve our position. Forex Time organizes free training seminars 4 times a week, and their forward-thinking approach helps in equipping you every step of the way.
Welcome back. We're still looking at the gap trading strategy, and Benga is still here to tell us all about that. But this time, let's look at some of the charts to get a better picture of what we've been talking about so far. Let's see an example of a buy opportunity using this market gap strategy. We just have that. Okay, that's what we have right now on the screen. So, Benga, what exactly are we looking at?
Now, you can see that there's a little bit of space, which you refer to as a gap, all right, between the closing price on Friday and the opening price on Sunday night. Now you can see the space is upward, so that's what we call an up gap. Okay, the market actually gapped upwards. Okay, so that is what you can see, that is confirmed by the shaded area. Okay.
Meaning it's been covered, that's what it actually
now
says.
The shaded area shows you that you wait a bit for the market to come down to cover the gap. Okay, so what traders do is that immediately they see a gap up like this. Okay, they wait patiently for the gap to be covered, and they now buy after the gap has been covered.
Okay, so we're looking at a buy opportunity here.
This
and it looks like there's been some looking at the trend, it looks
yes, you
looks
can
a little
see,
volatile, and
yes,
it's mostly
volatile.
downwards.
You can see on Friday, you see the market shooting upwards on Friday.
What currency is it?
This is Euro US dollar.
Okay, the Euro USD
currency pair.
Okay, so what is it? Was this mostly a buy?
Yes, this was a buy opportunity.
Okay,
this was sometime in March. Okay, this is not currently what is happening now in the market. Okay, now, but for the sell opportunities, okay, you see what is currently happening in the market now for Euro US dollar. You can see market has been gapping downwards. So you can see from the close on Friday to the opening on Sunday, there's a space, okay, and market pushed downwards. So that is a downward gap. And also, if you look at your chart, you'll see that over time that the market rose to cover up the gap, which was a good selling opportunity for traders because the vacuum has already been filled. Now the sentiment continues, the selling sentiment continues. So traders can now safely sell once the vacuum has been filled and they make their profit.
Now, since Sunday up until now, what has been that main key driver for either the selling or the buying, for especially selling of the euro?
Selling of the euro.
Especially for the euro.
Well, if you look at what has been happening, for example, on Friday.
So it's fundamentals?
Yes, majorly fundamentals.
Because I'm always trying to disprove Michael's. I know when Michael comes here next time, he's going to argue that with me because he keeps harping on the fact that it's more for currencies traders. You're not exactly hurt by fundamental news. It's always about the technical side of it.
When you look at gaps, gaps basically are due to fundamentals. Okay, things that happened after the market closed on by 5 p.m. New York time. Okay, because after the market closed by 5 p.m., things are still happening. They are still bringing out earnings reports, still doing so many things, still having meetings, and it's the result of those that actually leads to market gap.
Now, since the weekend up until now, all the gaps we've been seeing, how has trading been for Forex time for your fund managers as well?
Yes, I think most of them are really the truth is the market is very volatile right now. Okay, so most traders are trying to play safe. Okay, they are trying to be careful because sometimes you are hearing fundamental conflicting signals. Okay, last week some banks were suspended from Greece. Now this week they are telling us by Friday that they are going to give them about 18 billion recapitalization fund from ESFS funds in order so that the banks can continue their funding operations. Okay, so you are hearing conflicting signals, and most of the traders are erring towards caution right now.
So in terms of returns, since Sunday, even since 2 weeks ago, since the whole the Greece political turmoil started,
we have some managers have been making good returns because they are taking advantage of the sell-off on the euro, okay, and most of the major currency pairs, because this is the market is simply in a risk aversion mode. Nobody wants to take so many risks. Okay?
That includes you, right? You've been sitting on. You're one of those investors who've been sitting on the sidelines.
Risk aversion mode, and a lot of people are just buying the dollar and the Japanese yen.
So obviously this week, since the last week or two, it's the euro that's been the worst hit.
Yes, euro
USD pair or just euro.
No, I think it's all pairs across board, because when you are in a risk aversion mode, what people are just doing is moving towards safe haven currencies. They are buying the dollar. So you can see Aussie, you can see Kiwi, they are breaking their lows, okay, compared to what you have last week. They are off making new lows. So it's across board. The dollar is getting strong across board. Not because fundamentally the US economy is doing well, but because traders are in a risk aversion mode.
Because there's just nowhere else
because
for them
there's
to put
nowhere
their money.
else to go. Nobody wants to put their money in euro right now.
But
Nobody
isn't
wants
that
to put their
risky?
money
Because
in pound.
we don't know what these policymakers will decide at today's meeting. We know that there's some conflicting, the whole German, France, butting heads over the issue of euro bonds being
the
issued.
France president is going to come out with a proposal as usual, and from the German side, they are not really in support of it, because Germany do not want to accept any other liabilities. So they are looking at a soft project fund that would dissociate them from the liability of the eurozone. Okay, so basically, things are not yet okay for euro.
So going forward, today is Wednesday. We have 2 more trading days for the week. So what is the outlook for, especially, of course, the euro?
Yeah,
which is the center point right
well, in my own opinion, I think the euro is still going to lose some ground against the dollar. Okay,
that would also wouldn't that depend on the outcome of today's meeting?
Well,
or whether or not, because it doesn't look like there's much optimism.
They've not really given us any concrete plan. Okay, so they are just saying they will support the euro, they will make sure Greek does not exit from the euro, but we have not seen any concrete laid out plan. Okay, so I'm still thinking for today, for tomorrow, okay, euro is still going to lose some ground against the dollar. Then on Friday, well, because if they pump in the 18 billion and they actually, those major 4 banks in Greek, okay, they give them those funds in order to recapitalize so that they can continue their funding operations, then we may see a little bit of gain. Okay, but for now, I still see euro dropping. We might see probably 1.2500 level. Currently, it is around 1.2600 psychological level. It might actually get down to 1.2500 psychological level.
Okay, so one word of advice for traders for the rest of the week. What is that key? What do you want to say to traders?
The advice I will give to traders is that they should focus more on their money management, even though we know that we are in a sort of wash, rinse cycle. Okay, so wait for euro to go up, sell. Wait for it to go up, sell. Okay, but they should also focus on good money management. Okay, because if they don't do that while it's rising, they can end up losing so much money.
So basically, they shouldn't get too excited.
They shouldn't get too excited that the trend is down and bet the farm and sell. They should be cautious while selling.
Okay, thank you so much. I'm afraid we're going to have to leave it there. Of course, we hope to see you again soon. I have been talking to Olugbenga Fagbo. He's a currencies trader and analyst at Forex Time, and we have been looking at more trading tools for the currencies market. Today, we looked at a gap trading strategy, and of course, you just had advice from Benga. Don't get too excited. Watch your money management for the rest of the week. There's a lot of volatility out there at the currencies market. Let's quickly take the money market indicators with just a few minutes now to the end of the program. Let's go straight to the money market indicators for Tuesday. Interbank rates plunged yesterday by over 2%. We had more cash coming into the market. Of course, there's still liquidity squeeze persistent at the market. Core money, that's a short-term lending money, came down to 12.8% from 15%. The secured open buyback rates also shared about 2%, closing at a 12% average. Now, at the currencies arm of the market, the Naira slipped further against the US dollar. There's still pressure on the local currency. This time, it closed up at 159 Naira 32 kobo to the dollar, where we expect the central bank to hold its second and last foreign exchange auction for the week. On Monday, the Apex Bank offered $150 million, but that wasn't enough to support the Naira. Traders say they're hoping that the CBN may offer more today to help ease pressure on the Naira. Well, that's a wrap on today's edition of Business Morning. Thank you so much for being a part of it. Channels News Track is at 11. I'm Esther Ubodaga. Bye for now.